Hey everyone, welcome to the Token Warrant. I'm Mike Zajko.
I'm Regan Bozman.
And excited to have a conversation today with Will from Faction and Meredith Pitkoff, the CEO of Stork, Oracle Stork. Welcome guys. Thanks for coming on.
Thank you.
Thanks for having us.
You guys have hopefully listened to the podcast already. We've had some awesome conversations already on a variety of topics. But this should be a good one today because oracles are such a critical piece of infrastructure within the broader crypto ecosystem and DeFi. And it's a really long history of oracles in the space. So excited to dig in to Stork. Maybe just starting with you, Will. Faction's a slightly newer fund in the space, but if we get a little background on you and the Faction team.
Yeah, for sure. My name's Will Lees. I'm a deal partner at Faction. Faction is an early stage crypto fund. We're a joint venture with Lightspeed. We invest across the stack, layer ones all the way up to the application layer, focus primarily at the early stages. So I think seed and A is really our sweet spot. We'll do select Series B and later stage rounds, but early stage through and through. I joined Faction at inception, which is around 3 years ago now. Prior to Faction, I worked on the investment team at Accolade Partners, a fund of funds where I helped build out their crypto product. Accolade has since become one of the largest LPs in the crypto space, and it's actually where I first met Regan and Mike.
Yeah, you're the third Accolade alumnus.
I'm a little salty that Brandon and Josh were on the pod before I was, but hey, we're here. Well,
they did quite well, and they were the first guests. So you have big shoes to fill. Thanks for joining, man. It's good to see you. How about you, Meredith? You have an interesting background. The Stork background, I think in general is very unique. So it'd be great to hear more about you.
Sure. So I spent about the first 8 years of my career working in Web2 at a few different data companies. The first one was called LiveRamp, a very cool company that bred a bunch of young people straight out of college who then decided to start their own data companies really across the board in a bunch of different categories. But I've basically built out a few different data marketplaces, primarily for marketing technology. And then most recently, before actually starting Stork, I joined a crypto native high frequency trading firm, which Stork was incubated out of, started by a couple of my former colleagues. We started Stork at a very convenient time, the same week of Terra Luna crash. So we really hunkered down and kind of remained a small team for a good period of time and focused on building for a few clients. And then earlier this year, we did our seed round and have expanded and starting to.
And you guys got started, if I'm recalling correctly, somewhat in the Starkware ecosystem, right?
Yeah. So originally, we were really excited about StarkNet. At that time, it was pre-data availability as a larger theme, and we were really excited about Validium specifically. So the original idea was at the time, oracles were very native to different blockchains. So Pyth, Switchboard were just on Solana. Chainlink was on Ethereum and a few L2s. And that was majority of the landscape at that time. Obviously, Redstone was on a couple of chains as well. But we were really excited about StarkNet because we thought we're going to be able to build essentially an infinite data catalog. And the problem that we identified was just there's very limited amounts of data that is available to on-chain developers. Actually, within a month of getting the first version of our product up, also remember this is early testing days for StarkNet, we realized building a very comprehensive data catalog on-chain was still going to be very expensive and difficult and slow. And so we quickly pivoted away actually from that StarkNet native Oracle and very fortunately got hooked up with the Apex Pro team, which was building on StarkX. And we realized that there was a really exciting opportunity for us to build an Oracle from the ground up for decentralized derivatives exchanges.
Would love to dive in more to just the idea maze of kind of the start of Stork to where you all are now and kind of how the overall architecture has changed. But maybe for people who are not familiar, what are oracles and I feel like so many people probably got into crypto through Chainlink, maybe understanding what Link actually is or not. But I feel like oracles are definitely one of the more like interesting kind of history tales of crypto infrastructure to tell.
Yeah, for sure. So the traditional oracle, which was pioneered by Chainlink, was this idea, and we think now a lot of people call this a push-based oracle. But basically the idea was you'd have a number of publishers. These publishers would be responsible for putting data on chain. And basically the problem statement there that they're looking to solve for is data from the outside world, from Web 2 or the real world, not blockchain, isn't natively accessible to on-chain development. And so these publishers would be responsible for putting data on chain. First use case that really got any adoption was what's the price of a cryptocurrency? And then on-chain, an oracle, such as Chainlink, would have some aggregation logic that then, determines here is the price for this asset at this time. And now developers just have to essentially do like a get function on chain to get that most recent price. The issue with this, or one of the hurdles, was it was actually really expensive to run this operation, paying all the publishers, the gas costs, getting that data on chain. So it was expensive, it cumbersome, and it was pretty slow. And so the result of that was on certain chains, especially Ethereum, you would see certain assets only getting put on chain once a day. And there also was a hesitancy to put new assets on chain as well, because every new market would be an added expense. We even heard some crazy stats around this, that like it could cost $1 million a year just for one new data feed. So since then, there's been a decent amount of evolution in how oracles actually think about making data available to on-chain developers. The approach that we've taken at Stork is, instead of by default putting everything on chain, our publishers heavily rely on cryptographic signatures for all of the data that gets passed through our Oracle network. And basically, what's really cool about that from our perspective is you still have the same level of verifiability throughout the system. You can indeed show that every update that came from a publisher in our network legitimately came from them at that time because it's signed with their private key. And you can verify that both off-chain and on-chain. But it totally eliminates the overhead that we were previously talking about when it comes to putting it on-chain. And so out of the box, we have compatibility with every EVM compatible chain, plus many more actually, because a lot of them accept the same signature type, such as SWI, TON, etc. And then the other piece is like we were able to design something that is incredibly fast. And so end to end, our architecture is actually able to send out updates from the publishers to the end users in under 10 milliseconds. And like for reference, that is like a serious step function faster than what you'd be able to get before. That was like in the order of like several seconds.
And so just to like make sure I understand, like I explained that at a really simple level, is the right way to think about it with Chainlink, like, I'm Aave or someone, and I need some reference price of like the ETH-USD pair. Essentially, Chainlink, like every Ethereum block, is just like pushing that on chain, which is probably like roughly a 10-minute interval. And you basically just like reference that price. Whereas with Stork, essentially, maybe the way to think about it is just like, I'm making essentially like API calls out to like a centralized database, and I can just basically like reference signatures to make sure that data is valid, but basically like pull it at any arbitrary time I want. Is that like a decent way to think about it at a simplified level?
Yeah, it's close. So I'll be honest, I am not totally up to date on the heartbeat thresholds for Chainlink's like various assets, but like it definitely doesn't get updated every block. By default, and this isn't just Chainlink, it's, these oracles that follow this model. Usually there's some threshold that has to be hit for an update to get pushed on chain. And sometimes it's every 24 hours or like 1% change in price. And so oftentimes you could see that only happening a few times a day. For Stork, very close. Instead of thinking about it though as a centralized database, we actually aren't storing the data necessarily. It's more of like a pass-through system. So basically every update that comes from our publishers gets aggregated And in that aggregation process, we pass through the individual updates from the publishers themselves, the signed updates. And then we also basically include a Merkle root that has that algorithm that was used for creating the aggregate price too. And the reason that we do this is like we are very aware of the fact that our architecture is off-chain, but we still want to maintain a sense of trustlessness throughout the system. So we don't want anyone to ever have to rely or just trust the fact that Stork is doing what we're saying we're doing. But basically, and then the last like small detail that's maybe a little nitpicky is a lot of folks have started using this term pull-based oracles, and the idea is kind of like you hit an API when you need an update. Because we're dealing with very high throughput data, we actually are just streaming out the updates as they come in. So we do have like a REST API for folks that want that, but the default integration is you subscribe to a WebSocket and then you get every single update as they're available.
I mean, you mentioned this earlier, but it might have gotten, I think, lost. Was the idea always to start with derivatives exchanges, or like, is that just because you were in touch with all the founders in that space, or was like the tech was there and you were looking for someone to apply it? Like, how did you guys decide to go after that market?
Yeah. So basically what happened was as I mentioned, we got connected with Apex Pro, and they had some specific requirements around what data feeds they needed and how frequently they needed it. So basically they wanted an update at that time every 5 seconds. And they also wanted access to market prices, which are traditionally used by centralized exchanges for triggering liquidations or managing liquidations. For reference, the Apex Pro team is incubated by Bybit, so they were definitely influenced in some of the risk management practices that Bybit had implemented themselves at the Decentralized exchange. So we started building that out for them, but at the same time, we started just doing research, of course, on their derivatives exchanges, and something that was very confounding at the time, actually, especially coming from the world of Web2 data, was we noticed that there weren't a ton of them, but the handful of derivatives exchanges that did decentralized derivatives exchanges that existed at the time, they weren't actually using like a decentralized protocol. But in their docs, they were saying they were. And they probably were in some very limited capacity. So I'm not saying like they were explicitly lying, but they would use maybe Chainlink in a limited capacity. And then if you kept reading through their docs, there was this hand-wavy explanation about some other price service that clearly was built in-house. And then like if you went, one step further and you just like looked at their application, you see they had markets listed that weren't supported by Chainlink or the other incumbent oracles at the time. And so what was so fascinating about that was like they were building something in-house, but they didn't want to be. And it felt very apparent. And coming from the world of Web2 data, like that is the opposite of the problem you're used to. As a data company, usually you have to convince folks that it is worth using a data product instead of building it in-house. And so that became a very exciting opportunity. There's a set of customers that really want to use a decentralized oracle. They see that as very critical to building trust with their end users. And we later learned they also just don't want to spend time on building this themselves. The price feeds aren't like their secret sauce. And so that was the opportunity. And then, we expanded out from there and started working with other folks, building derivatives exchanges on EVM compatible chains as well.
I'm curious, like, oracles are really interesting in the sense that, like, it's definitely one of the few infrastructure categories kind of more in the middleware stack where it's like, I feel like there's obviously demand, right? Like every DeFi application needs an oracle, but there's also kind of this like cult following around, like, which historically has been the market leader. Like, did that dissuade you at all when you were thinking about starting Stork, just like considering kind of the Link Marines and how much like lore is around that?
It made me shut up. I think it felt, to be honest, I think actually Regan, the first conversation we had, it was not in the context of fundraising. And I feel like you were warning me about the Link Marines when I told you what we were building. It was hard. Like, don't get me wrong. Like, the first year especially was a real grind. There was the sense of, like just morale in the space was down. People didn't want to take a risk. It kind of actually felt like a I'll say the incumbent oracles, it felt very IBM-esque in that folks would acknowledge maybe this isn't the perfect solution, but like no one's going to get fired for implementing the incumbent oracle, whereas like using a new upstart is risky. You don't know what's going to happen. So it was a real grind, and we were very fortunate. In the first year, we landed 3 really key customers or partners, which was Apex Pro, Vertex, and OKX, who's working on a decentralized derivatives exchange as well. And they were very influential and great partners for, us designing this oracle. And I think a very big part in like the success or the adoption that we've seen today. But there was like, a real battle of overcoming a lot of the existing knowledge and frame of reference of how to evaluate an oracle that was set by the earlier players. I think the funny turning point, I'll actually give a lot of credit to Pyth, is like once they started getting a lot of adoption, it totally opened up developers' mindset to the fact that they could like choose an oracle. And it felt like there was more of an evaluation process around which protocol, which oracle was the right fit for them versus just the default of using the biggest player in the space.
Yeah, it's really interesting context. Will, maybe flipping to you, I'm curious, like would love kind of like how Faction, like how y'all have thought about the oracle market, but maybe like an interesting kind of like introduction to that is maybe just like how you guys approach investing. Is it like sort of bottoms up research on like, these are like the categories we think are really interesting, we're going to try to go find companies here? Or is it kind of more opportunistic, like someone like Meredith comes across your desk and is like, oh, like this is, a founder we really like?
Yeah. I mean, the short answer is it's a bit of both, right? I think for Stork specifically, the Oracle category, we kind of have touched on this, but yeah, it is one of the largest categories in all of infra. And just to like evidence that point, right? I think there's 80 billion and TVL today, 45, 46 billion is secured by oracles. So I think that just serves as, evidence that this is one of the largest categories out there. I think everyone has known that. Everyone has seen, the outcomes of Chainlink and Pyth. So it was very easy to have kind of a fundamental thesis on the category in the business. And I think, backing up a step, right? It's like, okay, how do we look at the market? How do we look at making investments? Generally starts with kind of a table stakes process of, that category deep dive, category landscaping, competitive analysis. We like to spend a ton of time with teams to understand their vision, the product. Technical diligence is something we pride ourselves in. And then, I don't think there's any substitute for customer references. And particularly in Stork's case, extremely positive universally. So,
Maybe that's like an interesting segue to just like how you guys kind of run a diligence process, and like maybe from like start, like you meet Meredith to like, how decisions are made, what the diligence process looks like how long that process usually takes. I feel like everyone you talk to is always just like super curious how different crypto venture funds make decisions internally.
Yeah, it is a really good question. And Meredith, feel free to fact check me on this. Our process
it took way longer than
No. We like to spend time with teams, right? I don't think there's any substitute for putting in the reps and like truly understand the company you're investing in. I think it gives you the edge down the line to be able to add value and, help the company grow and scale. And arguably, like that's the only way to invest. I think like rounds that come together in a day or two, it's just wild to me that, funds write checks that quickly without even meeting the team in person or, really being able to canvas the space. So I think, one, I would say it's always easier for a category where you have an existing thesis. Obviously the case here, but altogether, I would say our process maybe took 2 months. I guess it always starts with kind of that initial diligence call. Post call, we like to kind of walk away, spend some time like thinking through the vision, the product. Usually after that, it's a follow-up call with more folks on the team unpack specific areas where we still have questions, really kind of get into a founder's mind in terms of go-to-market and kind of like where they see themselves vis-a-vis kind of competitors, entrenched incumbents in the case here. And then, I once again, like there's no substitute for spending time with folks in person. So we actually met Meredith in ETH Denver. I think you just need to put those reps in. I think it's, you have to pass the vibe check on both sides. You want to, obviously work with founders where you can have a long-term relationship and just be candid and feedback. And we found that to be the case with Meredith. And then ultimately, I guess, post meeting in person, post technical diligence, post customer references. That's basically when we, went to IC and decided to put an offer in.
Mike, if I remember correctly, didn't Meredith give us some feedback that our vibe wasn't great?
And Meredith, did we pass your vibe check? Hopefully.
Factions vibes.
I think Meredith was pretty honest.
Fun story for the podcast, by the way. So we met in ETH Denver. We actually were having an event after our meeting. Meredith didn't show up to our event.
I went to that event. It was good look. That was a good party. Meredith, why do you want to show?
I have to play hard to get.
Yeah. That's a good point.
No, I didn't know about. I don't think I knew about it. Maybe
Will did put the invite out.
But maybe I'm not doing my job.
I feel like that was the hot party of the night. So good on the faction crew for pulling that together. Meredith, back in around ETH Denver, obviously like the market was a different spot than it's in right now. But you guys also seem to be you were on a really strong growth trajectory. But one of the things that's I think unique about you guys and how you track your sort of success in the market is one metric is this the total volume that's being secured by Stork Oracles, the trading volume. So can you talk a little bit like how you guys are measuring it, and then like at what point we're like, hey, we've hit an inflection point, like we should kick off the fundraise process?
Yeah, for sure. So we I think it's actually quite simple. We were working exclusively with derivatives protocols, and that is the key metric that these protocols are measured against. It's total volume. So if you go to DeFi Llama and you look at the derivatives page, the key metrics you see there, 24-hour volume, 7-day volume, cumulative volume. And it's a different category. And so they have a different metric that is relevant to them than, let's say, a lending protocol. Oracles traditionally have been measured against TVS, which is total value secured, essentially how much is locked with the protocols that they're working with. And really, it's our opinion that that's just a function of the first types of protocols that used Oracles were lending protocols. And so we think that Oracles need to be measured across multiple metrics, since we're now working with multiple types of protocols. To your point, really, I think at the time, again, perps have totally blown up. The market has really grown. But I do think at the time, actually, when we went out to fundraise, we realized we were securing the most volume of any Oracle across derivatives exchanges. And so we felt we had great conviction at that time that we found a product market fit. And we're really excited about growing the team and being able to bring on the resources to actually grow our customer base.
I'm curious on your end, like the fundraising process. I mean, I feel like for some teams, like they're kind of just doing like deep research. And so maybe like market dynamics are like a little bit less, for like a seed round, that's not a primary concern. Obviously for y'all, like there are other Oracles, a lot of venture funds have invested in other Oracles. Like, curious just kind of like what some of the biggest questions were when you guys started this process.
It was actually pretty funny. Like at the time, OEV was the hot concept. Oracles.
It brings me back.
And from some, not everyone, but from some VCs, the ones that I think just maybe didn't click for what we were doing, they asked me a million questions about OEV. And they weren't very satisfied with my response that I stand by today, that in theory, very interesting concept, but I didn't think there was the demand for it yet. So we weren't going to spend resources on it. I'll let people decide on how that actually panned out. But I think, there were a number of VCs that had made previous Oracle investments. There are still like a number of Oracles, and while Chainlink and Pyth have had a lot of success, others maybe haven't performed in the way that they expected, or at that time were feeling that way. And so I'd say Faction was probably actually in the minority of like having an Oracle thesis. A lot of VCs still weren't very excited about investing in Oracle, or were skeptical about another Oracle's ability to break through. So I think, a lot of questions kind of around our ability to actually grow, to be able to capture more of the market and compete with these like much bigger, well-established, very well-funded teams.
And maybe while we're like just on the topic of competition, we've mentioned Pyth a few times and kind of the role they've played in like evolving and unlocking the Oracle market. Can you just like walk through kind of at a high level what they did that was different from Chainlink, and then maybe how Stork's architecture differs from Pyth?
Yeah, for sure. So, so Pyth originally started as a Solana native Oracle, and then I believe it was in the fall of 2022 that they transitioned to what they call a pool-based model. And basically what that is they have their own chain called PythNet, where all of their data providers push data onto their chain. It's relatively cheap, but the nice thing is they only have to push data to one place. Pyth then has a partnership. Data is aggregated there. Final price is calculated based off of various metrics that they have. And then they have a partnership with Wormhole, where they leverage Wormhole's cross-chain communication in order to make that data available on other chains. But there's also the ability for individual protocols to just pull that data directly from PythNet. So they also, at the time, like there's some technical differences between what we're doing and what they're doing. But from a user perspective, it actually felt quite similar in that Stork's product and Pyth's product allowed protocols to now get data off chain and put it onto the relevant chain that they're building on when they needed it. And so Pyth expanded out into EVM chains. So basically, like from a user perspective, it feels similar in the flow, in that you can get data off chain and now push it onto the chain that you actually want to use it on. And it allowed for a higher throughput of data as well. But there are a couple of differences. So basically, by putting data on their chain and then using Wormhole to put it onto the end chain where it's going to be used by the protocol, they're actually adding in like a few seconds of latency into that whole process. And so while they're actually delivering like higher frequency of data or highest throughput of data updates than we'd previously seen, it still wasn't like real time. Stork, as I mentioned before, because we have this off-chain architecture and it's leveraging cryptographic signatures, we don't have the same limitations that are introduced through a decentralized messaging protocol and a blockchain for aggregation. And so that's why instead of a few seconds, it takes us only about 10 milliseconds to communicate these price updates.
I mean, it's kind of interesting. You have Pyth that carved out the Solana niche. You talked about OEV, or Oracle extractable value. Will, for you guys, like, when you think about the Oracle market, is it like, hey, we think, DeFi is just going to grow massively, so big opportunity just there? Or is it like new product categories like OEV? Is it new ecosystems like Sui, which Stork is deployed on now? Like, what gets you guys most excited from a growth standpoint within the market?
Yeah, I mean, we're still so early, right? I think, since the original design of Chainlink and Pyth, right? Like the on-chain landscape has just exploded and evolved in a way. I don't know, candidly, like I don't think many people expected 3-4 years ago, which we touched on, entrench slow-moving incumbents. I think, we just look so different from where we were in 2018 and even in 2021. So with the emergence of like all these new chains, new primitives, new applications, there's just a need for solution that, isn't one size fits all, can cater to those diverse needs. And yeah, it's just more flexible, serving developers in the way they want to be served. And that's exactly where Stork fit in.
Maybe actually this is a good segue because Meredith, I don't know who on the team published the blog post, but the blog post is actually Oracles are dead. And Oracles are dead, long live Oracles and the open data marketplace. So like maybe
rehashing a lot of that blog and
maybe it's a new new positioning, but like what how do you guys think about is it a new architecture, a new way to design Oracles? Like what, how do you guys see this?
Yeah. So to be honest, it just felt like a very natural evolution of what we had already built. So basically, like, we're being a little cheeky when we say oracles are dead. We still believe that there needs to be, an ability to make data trustlessly and verifiable on chain. But we don't think that the old model works really well. And I think if we were to sum it up, what the issue is oracles have assumed this one size fits all approach. And basically what that means is we're going to take a singular approach to calculating the price of a cryptocurrency. And that's more or less going to work for all protocols when it comes to their data requirements. But as Will mentioned, we've seen massive proliferation in the types of applications that are being built on chains, and really just like the hunger to build new things. And with that, there are entirely new data requirements that come along with that. And also data can be a real way for protocols to build a more competitive product and better user experience. And so that's the area that we're very excited about. Being incubated out of a high frequency trading firm, given the team's background, building for derivatives exchanges as a first use case made a lot of sense. And we had the background and expertise to do that. But what we really are excited about is taking basically the infrastructure that we leverage for this derivatives exchange or real-time Oracle service and making it into a more composable structure where now any builder can get access to whatever data they really need is the TLDR. But in reality, what that looks like, what is an open data market? Pretty simple to conceptualize. On one side, you have data providers. On the other side, you have data consumers. Those would be protocols, blockchains. And in the middle, we have tooling that makes it very easy for the two to communicate and transact. And so currently on the data provider side, we're working with about 10 high frequency trading firms and market makers who are making accessible, very low latency, very high quality data feeds. And then we have, we've started expanding out beyond just working with derivatives exchanges, and we're also working for perpetual swaps. We're also working with some options protocols now. We're working with some folks on prediction markets, actually. So that shows how flexible and composable this architecture can be. And then one of our one of the use cases that have always been really excited and proud to work on is with Ostium, who is built perps on top of real world assets. And with us, they were able to basically make data available on chain that had never been available before at the price of lean hogs.
I hate having to rely on centralized data providers for the price of lean hogs.
Mike is about to go 10x levered on hogs post
well, Mike was actually complaining this week about the price of meat. He was telling me he's going to start hunting near him. So he's not going to have to think about it anymore.
I was considering hunting. Will or Meredith, for that matter, ever shot a deer?
I have not.
There's probably not in the crypto industry unless you're in the Bitcoin community, I imagine. This is
weirdly, where I grew up, I'm originally from this town called Maplewood in New Jersey, and there's a reservation that there was too many deer. And so every year there was basically hunting season where people from other locations would come in to shoot the deer, but I'm pretty sure
maybe I'll come out to New Jersey to do some deer hunting then in the
exactly.
fall. Seems like a good time to to come out there. But you do touch on an important point, which is like the real world asset space, which I haven't really talked about. Like, what are the biggest opportunities within that? Like, where are you seeing demand from like more traditional players that are entering into crypto, or is it just existing crypto protocols? Like, did you guys, was RWAs like a kind of a big part of your research on the Oracle space, or like the more traditional crypto DeFi?
I think it's the general idea of just being completely flexible, completely customizable, while also maintaining kind of like Stork's key differentiator in our mind, which is that, ultra low latency DNA coming from obviously the team's background working at Dexterity and in HFT. So I think my point of the entire crypto ecosystem today is early. All of these categories will be data consumers in some form or fashion. And I think like Stork is just positioned to be able to serve everyone.
Yeah. And kind of going off of that, it doesn't organically come up a lot in this space, but if you just look to Web 2 and the amount of infrastructure that is built for moving data, it's massive. And it's a massive category, very successful exits in large businesses. And it's our thesis that like the demand for tooling to be able to access and move data in a trustless and verifiable way, also with very low latency, is only going to grow over time. And so that's why we're really excited about, as Will's mentioned a few times, the customizable and composable piece of this.
I was curious, just like some of the examples you mentioned beyond real world assets, you mentioned prediction markets. Like, how are people like Polymarket actually is there just an Oracle that's bringing like polling data on chain? Like, how do they actually?
Yeah. So, are you familiar with UMA?
Yes.
Yes. So Polymarket uses UMA. Actually, one of the so there's, as I'm sure a lot of people have noticed, a lot of excitement around prediction markets. There are a lot of new folks thinking about and interested in building in this space. And one of the issues that we have seen, or that has been top of mind for these folks, is how do you trustlessly resolve a market, but also provide a good UX? And the traditional design for this hasn't been the best user experience. And there's basically like this concept on Polymarket where you can dispute a resolution for a market. And there are a few markets who've gotten stuck in this dispute period. And they just basically it's never ending. And sometimes it's complicated, right? Like at a high level, when you create a market, you might think the outcome is really clear, but then it's like in the details that it's not very clearly specified how it's going to be resolved. It leads to these slightly nebulous situations. Sometimes it's less ambiguous, and there's just issues with the dispute process anyways. So that's the main thing we've been talking about with projects. There's definitely a range in opinion around maybe a centralized but verifiable solution works. Maybe the creator of the markets should be able to resolve them, and that's taken into consideration when you're participating in the market. And then there's also the idea of having councils. So maybe folks that are seen as more trusted and likely to be able to effectively resolve those. I think Drift, for instance, with their prediction market, has a council that is responsible for resolving them.
All roads right now are leading back to prediction markets. Definitely the hot category of late Q3 here in 2024. Since we're getting down to the last couple of minutes here, Meredith, you touched on derivatives. Sounds like you guys want to expand out into a few different places. What's coming next for Stork? What are the things through the back half, the last quarter of the year and into 2025 we should expect from you all?
Yeah, for sure. So we recently released implied volatility feeds for options. We now have some feeds on how prediction markets are actually trading, which is allowing protocols to offer leverage on top of prediction markets, in case you needed more of a thrill. And then we also just this week actually released basically our publisher agent. And the idea behind this is basically anyone now who has like a high value data asset, even if it's being used internally, can very easily now make it available as an external verifiable data product that can be used on nearly any chain. And it's, we think like now 100x easier actually to get that data up and running and available to on-chain developers. And so we're really excited. That's like a really key piece for us for continuing to build out the open market, open data market, and start facilitating the use cases.
Awesome. Well, thank you both for coming on. We didn't really talk about the fundraise, but it's already been announced. So I think it's out and out on Twitter already that people can read more. We'll share it with the show notes and with the tweet that goes out, so people have all those details. But yeah, thanks again for joining us, Will and Meredith.
Thank you guys.
Thanks
This was fun.